In the metals quadrant, copper's falling, but gold is a little bit more interesting of a story. Gold gapped higher today, but then immediately filled the gap and continued down to fall over 1% as we traded lower in the day. Gold closed yesterday 1278.30, opened at 1278.50. It's just a short period in the futures, about 45 minutes where it was closed. Jumped up 20 cents immediately and then immediately collapsed and continued on lower through the course of the session. Big part of that was Jay Powell's comments in yesterday's Fed press conference, the FOMC press conference, as he focused on low inflation in his comments. He said that the FOMC, the committee, has seen a trickle off of inflation. While inflation had been near their 2% goal for quite some time, it's fallen off slowly. He did say those would be transitory, but for those people that look at gold as an inflation hedge, certainly was a reason to sell off their gold futures contracts if you're not looking at any sort of growing inflation in the near term. Having said that, over a long history, gold isn't the best inflation hedge anyway, but it does trade that way. So Powell's comments definitely pushed gold a little bit lower than it otherwise would have been. And then the dollar itself is technically strong. The dollar is following through on yesterday's upside predicted by a long tail breaking back above some key moving averages, and we extended that up move in that dollar index today. The inverse relationship between the dollar and gold, really most metals, happening with copper as well, will take over when all else is equal. Jerome Powell's comments were yesterday, the stronger dollar not providing any sort of a bid to the gold futures contract.